You'll hear it everywhere, right? The UAE's real estate market is on fire. It's loud, it's exciting, full of record-breaking deals and launches that sell out in minutes. But our source for this explainer, an analysis by Dr. Pooyan Ghamari, says that's not the full story. Not even close. Let's get into it.
And see, there's the trap. When every single developer is chasing the same shiny objects, the real opportunity has already moved on. So this isn't just us talking about the market. Think of this as a map to finding a real structural advantage while everyone else is looking the other way.
And that's the big question, isn't it? Beyond all the noise and the headlines, where is the actual structural opportunity? We're about to break down a massive opening in the market, one that's built on infrastructure, capital, and land that most people haven't fully priced in yet.
Okay, so to find this opportunity, first you have to completely change how you look at the market. You've got to shift from just a surface-level reading to something much, much deeper, a structural one. This right here is the key difference. A surface reading tells you what is happening. Hey, another launch sold out. Okay, great. But a structural reading tells you why it's going to keep happening and, this is the important part, where the next wave is going to land. The real edge isn't in chasing yesterday's news. It's in understanding the architecture underneath the market.
And that brings us to the core idea, arbitrage. Now, let's be super clear. We're not talking about speculation or gambling. This is about identifying land where huge, game-changing infrastructure is already confirmed, but the market price hasn't woken up to that reality yet. It's the gap between today's price and its locked-in future value. That gap, that is where you make your money.
So if that's the theory, where are these gaps in the real world? The analysis points to 5 very specific corridors where this arbitrage opportunity exists today. Let's run through them.
First up, Dubai South. The source material calls this the single most important infrastructure play happening in the entire UAE. The gap here between today's land prices and its future reality is it's the biggest one out there, and it all boils down to one massive project.
128 billion dirhams. That's the investment turning Al Maktoum International Airport into the world's largest. And look, this isn't just a dream on a PowerPoint slide. The contracts are signed, work is happening. This project is going to create a tidal wave of predictable demand for housing for its workforce, demand that today's supply can't even begin to touch.
Okay, next up, Sharjah. Now, this is the one that's presented as the overlooked gem, the structurally compelling opportunity. The argument is that this is where some of the absolute best developer margins are going to be found in 2025.
And here's exactly why. Land in Sharjah trades at a staggering 40 to 65% discount compared to similar spots in Dubai. Now, this isn't because there's no demand, it's because the big money just overlooks it. This cost difference makes developer margins of 28 to 35% structurally achievable. I mean, those are numbers that are getting really, really hard to find next door in Dubai.
The other 3 corridors offer their own unique angles. You've got Ras Al Khaimah, which is all about the win effect. That one resort has fundamentally shifted its credibility and is repricing the entire market. Then there's Abu Dhabi, where the real play isn't just showing up with cash, but building strategic partnerships with master developers like Aldar. And finally, right inside Dubai's own master communities, the arbitrage is hidden in plain sight. It's in those secondary plots held by private owners who just can't develop them on their own.
Now, this brings up a pretty big question. What if you don't have the tens of millions in capital to just go out and buy this land? Well, according to the source, the best deals don't actually require it. It's all about having the right structure, not just a huge pile of cash.
The secret is a well-structured joint venture. Here's how it works. The landowner puts in the land, right? The developer brings the execution, the know-how. The developer gets a management fee during construction just to cover the bills, and then the net profits are split. You see? This whole setup requires zero upfront capital from the developer for the land itself. You're basically trading your cash for your credibility and your ability to get the job done.
But, and this is a big but, there's a catch. This whole window of opportunity, it's not going to be open forever. The analysis argues there is a 24-month clock, and it is ticking down before these arbitrage gaps close for good.
See, by late 2026, all these future plans are going to become visible realities. The Dubai South Airport expansion will be undeniable, the Wynn Resort in RAK will be almost finished, and once the market can physically see the future, it's going to price it in, instantly. At that point, the arbitrage opportunity, that beautiful gap we've been talking about, it's gone.
And that brings us to our final, and maybe the most crucial takeaway. It's a strategic rule that applies to every single project, And if you get this wrong, you can silently kill your margins before you even break ground.
There it is. Define your buyer before you finalize your land. Let me say it again. Buyer first, land second, every single time. The most common and expensive mistake a developer can make is designing an amazing product for the wrong audience. That mistake gets baked in at the design phase, and it becomes almost impossible to fix without torching the project's economics.
You know, the UAE market has at least 4 totally distinct types of buyers. You've got your end user, who needs a family home with a garden. You have the yield investor, who just wants a small, efficient unit that generates cash flow. Then you've got the lifestyle buyer, who's paying for a branded, high-end experience. Each one of them needs a fundamentally different product and a different location. You have to know exactly who you're building for before you even look at a piece of land.
So, we'll leave you with this final thought. The big picture trends in the UAE are undeniable. Population growth, massive investment, capital pouring in. But the difference between making an ordinary return and an exceptional one is going to come down to precision. The window to act on this kind of structural understanding is wide open, right now. The only question is, are you just watching while you should be building?